Greetings, humans. You have once again taken a complicated global system and decided to stress test it with a potential war. Bold strategy. Today I will explain why a conflict between the United States and Iran is not just about politics or missiles. It's about money, and more specifically, why it can quietly damage the entire global economy. Pay attention. This affects you more than you think. The real issue is oil, not just war. Let's start with the most important concept your species keeps underestimating. Energy runs everything. Your cars, your food supply, your factories, your entire economy. And a huge part of that energy still comes from oil. Now here is where it gets interesting. A massive portion of the world's oil travels through a very small location, the Strait of Hormuz. It's basically a narrow choke point where oil from the Middle East gets shipped to the rest of the world. And Iran sits right next to it. So when tensions rise, even slightly, markets don't wait, they panic. Because if that route is blocked, even partially, global oil supply drops instantly. And when supply drops, prices go up, not slowly, violently. Oil prices rise means everything gets expensive. Now here's where humans usually underestimate the situation. You think rising oil prices just mean, oh, gas is more expensive. No, it's much worse than that. Oil is involved in almost everything you use, transporting goods, producing food, running factories, generating energy. So when oil prices rise, the cost of doing business rises. And when business costs rise, those costs get passed to you. Food prices go up, transport costs go up, electricity gets more expensive. Suddenly your entire lifestyle costs more. This is called inflation, and it spreads through the economy like a virus. Slow at first, then everywhere. Inflation plus slow growth equals a bad combination. Now here's where things get uncomfortable. Inflation doesn't just make things expensive, it also slows everything down. Because when prices rise, people spend less. Businesses become cautious. Investments decrease. Economic activity slows. So now you have two problems at the same time. Prices going up, growth going down. This combination has a name, stagflation. And humans, historically, do not handle it well, because central banks are stuck. If they try to fight inflation, they slow the economy more. If they try to boost growth, inflation gets worse. There is no easy fix, only damage control. Recession risk. Yes, it gets worse. Now let's talk about something humans fear but rarely prepare for. Recession. Here's a pattern your history shows very clearly. When oil prices spike sharply, recessions tend to follow. Why? Because high energy costs act like a tax on everything. Businesses struggle, consumers cut spending, profit margins shrink, and eventually, the economy contracts. So when a conflict threatens oil supply, economists start asking, is this the trigger? And right now, that question is very real. Markets hate uncertainty, and war creates a lot of it. Now let's talk about something even more fragile than your economy, confidence. Markets run on expectations, not just reality. When a war starts or escalates, suddenly nobody knows what happens next. Will oil supply collapse? Will other countries get involved? Will trade routes shut down? So what do investors do? They hesitate, they pull back, they reduce risk. This creates stock market volatility, lower investment, slower economic activity. Even if nothing catastrophic happens immediately, the fear alone is enough to cause damage. This is a global problem, not a local one. Now here's something many humans fail to understand. The economy is global. You are all connected. So when something happens in the Middle East, it affects Europe, Asia. Emerging economies, supply chains everywhere. Energy prices rise globally. Shipping becomes more expensive. Production slows in multiple countries at once. So even if your country is not directly involved in the conflict, you still pay the price. Literally. You say, but we produce oil. But it's not a solution. Some of you might be thinking, okay, but some countries produce their own oil. They'll be fine. No, that's not how this works. Oil is traded in a global market. So when global prices rise, everyone pays more, even producers. Yes, they might earn more revenue, but the rest of the economy still suffers from higher costs. So overall, still negative. The longer it lasts, the worse it gets. Now we arrive at the most dangerous factor, time. A short conflict, markets panic, then recover. A long conflict, that's when real damage begins. Because now you get prolonged high energy prices, persistent inflation, weak economic growth, increasing risk of recession, and the longer uncertainty continues, the more confidence erodes. This turns a temporary shock into a long-term economic problem. How this affects Western countries. Now let's talk about you, Western humans. You might think this conflict is far away, not my problem. Incorrect. This is absolutely your problem. Western economies are heavily dependent on stable energy prices, global trade, and financial confidence. And this war threatens all three. First, energy. Even if countries like the United States produce oil, they still operate inside a global pricing system. So when oil prices rise globally, fuel becomes more expensive. Transportation costs increase. Everything from groceries to online deliveries gets more expensive. Second, inflation. Western economies are already struggling with inflation cycles. Now you add another shock, you make it worse. Central banks are forced into difficult decisions. Raise interest rates leads to slow the economy. Lower rates leads to inflation rises again. There is no clean solution. Third, financial markets. Investors hate instability. So, geopolitical tension rises. Stock markets become volatile. Investments slow down. Businesses delay expansion, which means fewer jobs, slower growth, and less economic momentum. So no, you are not far away from the problem. You are directly connected to it. Welcome to globalization. How this affects the Middle East. Now let's talk about the Middle East. This is where the situation becomes even more complicated. Because for this region, it's not just economics. It's economic plus plus political, plus physical instability all at once. First, oil economies. Many countries in the region depend heavily on oil exports, so higher oil prices can actually increase revenue in the short term. Sounds good, right? Not exactly, because instability scares investors. So while governments might earn more from oil, foreign investment drops. Tourism declines. Business activity slows. Second, risk of escalation. Conflict in this region rarely stays contained. Tensions can spread to neighboring countries. Trade routes can be disrupted. Infrastructure can be damaged. And suddenly, economic growth turns into economic survival. Third, long-term uncertainty. Even if the conflict doesn't fully escalate, just the risk of instability is enough to hold the region back. Companies hesitate to invest. Projects get delayed. Growth becomes unpredictable. So yes, some countries might benefit briefly from higher oil prices, but overall, the region becomes more unstable, less predictable, and economically weaker in the long run. So let me simplify this for your species one last time. A war between the US and Iran doesn't just stay on the battlefield, it spreads into the economy. It raises costs, slows growth, shakes markets, and increases the risk of recession. There is no hidden benefit, no economic upside, only consequences. But humans will still move in this direction, because long-term thinking is clearly not your specialty. Good luck, you are going to need it. Comment oil if you actually paid attention.